I'm John Howard. In today's short video, I'm going to cover the Case Shiller U.S. National Home Price Index as of right now. Right now, at the time of this recording, it's July of 2025. This data is actually covers really the first half of 2025. So what I've been doing is spending a bit of time actually on the Case Shiller indexes. In case you don't know, they've kind of established this index. I've also been looking at, the Case Shiller S&P 500 index. In fact, I did some content and a video recently on the 30-year Case Shiller home price index from 1995 to 2025 and how it did 309% compared to, and comparing that to the NASDAQ, the Dow, as well as the S&P 500. But this one is just really what the U.S. national home prices look like, and according to the Case Shiller index. Okay, so the housing market reality check. Case Shiller data shows resilience despite headwinds. The latest Case Shiller index reveals a fascinating story about America's housing market, one of continued strength amid persistent challenges. While home prices rose 3.9% annually during Q1 2025, we're witnessing a market that refuses to buckle under pressure. The numbers tell the story. Regional variations paint an interesting picture. New York leads with 7.7% annual growth, followed by Chicago with 6.95% and Cleveland at 6.58%. Only Tampa, Florida, showed a decline of negative 1.46%, continuing its month-long slide. There's a 20-city index, and this 20-city index grew 4.5% annually, while the 10-city index climbed 5.2% annually. What's driving this resilience? Well, despite mortgage rates hovering at the mid 6% range and ongoing affordability challenges, limited housing supply continues to underpin prices across most markets. As S&P 500 Nicholas Godek notes, buyer demand has certainly cooled compared to frenzied pace of prior years, but limited housing supply continues to underpin prices. The Federal Reserve's impact, the Fed's aggressive rate hikes in 2022 and 2023, created what Bankrate's Mark Hamrick calls the golden handcuffs. Higher rates limiting homeowners' desire to sell and further constraining inventory. With current 30-year rates at 6.86%, this dynamic persists. As I actually do this video and write this, I'm actually one of these folks. I was able to refinance my properties, which are investment properties, to actually, they are all at 2.8% 30-year fixed. And it is, certainly a wonderful thing to kind of look back on that and be able to, achieve that. And there's a lot of people in that boat. And that doesn't mean that there's all those people, aren't in situations where they have to sell, because in some cases, they do, right? And, for real estate investors, that's just a matter of, finding those opportunities. Now, looking at the long game, the 20-year perspective is striking. 20-year price appreciation perspective, right? Seattle tops appreciation at 175%, while the national appreciation hits 102% compared to 66% cumulative inflation. This shows housing's role as wealth building vehicle over time. What this means for real estate professionals, this data underscores several key points. Supply constraints remain the primary price driver. Regional markets show significant variation. Affordability challenges are reshaping buyer behavior. The market is cooling, but not collapsing. So what's interesting is I just talked about the 20-year. So in this analysis, we do cover the 20-year. But what I want to say is I think the 30-year is actually, data is great, right? But the 30-year is more telling. So in another video I did in more content, in other content, it is 1995, the Case Shiller Home Price Index compared to the NASDAQ, the S&P, and the Dow. Even though the NASDAQ did 2,111%, the Case Shiller Home Index did 309%. But again, that's home price to home price. So if you're a real estate investor and you're doing investment properties, if you can put down a 10% down payment, that's actually a return of 3,090%. So as you can see, that actually beats the NASDAQ, which was the highest performing index, by literally about 1,000%. And I think that 10% is a fair number. The reason 10% is a fair number is because what you could do is an investor can put a down payment down for 10%. In some cases, a first-time buyer or FHA, folks are putting down something like 3%, so somewhere between that 3 to 10% rate. But 10% is fair because you could put 10% down. You could move into it, you could live there, you could furnish it, and then you could move out and you could rent it out. And that is exactly what I did for the properties that I owned. Now, I will say that I did put more than 10% down just because I wasn't, a lot for some of my earlier properties, I wasn't as savvy, a super savvy real estate investor at the time. But if you do put 10% down, that would be a 3,090% return, beating the NASDAQ by almost 1,000%. So what's the bottom line of what's going on right now, according to the Case Shiller Index? Well, home prices may be reaching their logical peak for many buyers. Their fundamentals, which are limited supply, demographic demand, and economic resilience, suggest stability rather than crash. For buyers, this means being prepared for sticker shock and potentially adjusting expectations. For sellers, it's still a relatively strong market, though not the seller's paradise of recent years. As we navigate the market dynamics, understanding these trends becomes crucial for making informed decisions in today's complex housing landscape. So there you go. So what do you think? Are you someone that's in the golden handcuffs where you actually have a property and a very low rate in that 3% or somewhere around the 3% to 4% rate, and you have the golden handcuffs? Let me know. Let me know in the comments area. Everybody, I've been covering content on real estate. I'm actually a real estate investor. I've been doing furnished rentals, short and medium term furnished rentals for literally the last 2 decades. And during that time, I also launched 4 businesses and got them up to 7 figures plus. And during that time, I also owned or operated 5 different short and medium term rentals. So I can say that it's something that you can certainly do alongside of other things. One thing that I have come to appreciate about real estate and certainly like about real estate is you can have some really good times, and then sometimes, with your career, in my case, entrepreneurial career, you can have some flat lines. And as long as you're invested in real estate, it should do its thing and have compound interest do magic. Also, when you invest in real estate, you get 5 benefits. You get appreciation, you get rental income and cash flow, you get amortization through loan pay down, you get a tremendous amount of tax savings, which is, really depreciation, and then active income offset, provided you, do qualify, under the STR tax loophole or as a professional. And then the 5th is you actually get the ability to borrow against the properties so as to buy more or, buy another business. You actually, there's a 6th benefit, which is you can move into one of the properties when you retire, if so. And that's something that I've been thinking about lately as I kind of, progress further through middle age. If you like this content, you can consider giving the video a like. You could also consider subscribing to the channel. If you are interested in getting into real estate investing, and if you're not already invested, I have some links in the description. I have something called the SMTR Launch Kit, very basic, simple program. You can go click on that. You'll also see my email address in the description. You could just go ahead and take a look at that program. Or I also do very basic, again, very inexpensive email coaching if you're interested in potentially working with somebody that is maybe an expert or a little bit further ahead of you, and you want to learn something like short medium-term rentals. I actually do a hybrid of short and medium-term rentals. It works great for me, or long-term rentals for that matter, right? Or if you know somebody that wants to get into real estate investing, you can forward them this video and show them the links. Okay, everybody, thank you very much and have a great one.